Good afternoon and welcome to the Wall Street Crossover Show, sponsored by Admiral Markets and with their market commentator who is Darren Sinden.
Good afternoon, Zach.
Good afternoon. Anything special on your mind today? Wednesday?
Well, I don't think there's a fair bit of data, I suppose. Just being biased, I'm really thinking about tomorrow more than today because of
the tube strike.
Well, that and the and Super Thursday from the Bank of England, where we're going to get this, one-off massive data release, and then shortly after the press conference. But yes, obviously the tube strike is also in my mind.
Right. Well, today is Wednesday and a PMI Wednesday, it would appear.
Yeah, it would indeed. As we move to our first slide, we can see that there's been a raft of PMI data. I've just picked a few points out of the myriad of numbers. But first of all, French services PMI for July came in at 52. Forecast was 53. The prior read was 53.4. What's surprising here is that across most European economies, the service reads have been better, and it's been the service sectors that have been driving the growth, if any. But here in France, perhaps not unsurprisingly, there's a contrarian read. So that's another negative point for the powers that be in Paris and those in Frankfurt to consider. But if we move across to Germany, there's a slightly different outcome there. 53.8, the July read for German services PMI, marginally ahead of the forecast of 53.7, and the prior read of 53.7 as well. So all these numbers, of course, above 50 are signs of growth. It's just that they're not growing as quickly as perhaps the ECB would like, and also they're not in a contiguous trend, if you will. And then the composite number, i.e., so manufacturing and services combined for the whole of the Eurozone, that came in at 53.9, ahead of the forecasted 53.7 and the prior read.
It seems quite decent, apart from when you look at the UK number, which puts it into the shade.
Yes, we'll just leapfrog over the Italian figure there, and we will just have a look at the UK services PMI. Came in for July at 57.4. The forecast was 58.2, so we slightly undershot, and we were down on the prior read as well, 58.5, but nonetheless a much stronger reading than our European counterparts. And then one other number that took my eye from Europe was industrial production from Italy. This is the number for June, the month-on-month figure, and it came in at minus 1.1%. against the forecast of minus 0.2% and a prior read of plus 0.9%. So a wobble in...
car crash, I would say.
Well, the currency may well have its part to play, but a wobble certainly as far as its Italian industry is concerned, and that's slightly concerning, I think. But could just be a one-off. We'll have to see how the number looks next month. So if we move on to our next slide. Okay, well, the big gainer today in Europe is Société Générale. That's ticker GLE in Paris, trading around €48.42, up 8.5%. And as we saw with BNP earlier, I think it was last week, wasn't it? Now, if you've been getting things right in France, the market rewards you, and the figures are impressed. Profits jumped to 25% as equity and derivative trading performed well. Revenues grew by 16%. I think overall, I think I'm right in saying that equity trading revenues were up 61%. 6.87 billion was the total revenue figure, and perhaps more important than the absolute numbers was the fact that the management could be upbeat and look forward to.
So on fire really on the fundamental front, and surprisingly so.
Yes, I think they, it's been fixed income that's been driving a lot of banking performance of late. But to see SocGen come out and flag the equity and derivative trading and to suggest that they think they can repeat the exercises is probably good news for the sector as a whole. And then just over the border into Italy for Telecom Italia, TIT. In Milan, €1.22, down 1.3%. Not a huge move, but I just think that they wanted to flag this story around the stock. Telecom Italia is considering reorganising itself into two businesses in the same way that BT did a few years ago, and that is to split itself into a network company and a service company, and it's doing this perhaps for the wrong reasons. It's in the hope of avoiding fines from the regulator over its practices of network access charges to peers, like Vodafone. They're suing for €1 billion, and one or two others are also on the case. There's a board meeting tomorrow to consider that decision, so we could see Telecom Italia divided into two. It might just be a holding company structure, or they might actually divide the businesses properly and segregate them, so we'll have to wait and see.
Okay, well, let's move on to the M&A side of things.
Okay, I just wanted to cover a story that broke yesterday afternoon after we'd gone on air, and this was the bid by Shire Pharmaceutical, which is SHP in London, trading around £54.50 today. They launched a $30 billion bid for their US rival Baxalta, BXLT in the States, trading around $37.30, up around 12.5% on that news by the close yesterday. The company's management had spoken over a month ago, but the Baxalta board is not interested in doing a deal. Shire decided yesterday to approach shareholders directly with this formal offer. In terms of the value of the deal, it would be worth around $45.23 for each Baxalta share. That's roughly a 36% premium to the closing price on Monday. The deal is all paper though, so no cash element at the minute, and that's to preserve Baxalta's tax status, which came about the way that they were spun out of a company called Baxter International. If the deal were to go ahead, it would be quite transformative for Shire. It would turn them from an old style drug company into a more dynamic biotech firm. But a couple of analysts have pointed out that by recent standards, the deal terms are not super attractive. I think 50 to 60% has been required as a premium to seal some of the recent deals in the pharma sector. The key for Shire is the pipeline, a promisingly pipeline of drugs, and they think it could, if they get hold of this pipeline, increase their revenues to around $20 billion per annum by 2020. So they're playing for quite high stakes. To try and tempt people into accepting the deal, they've said that if it goes ahead and it's successful, then they'll start the share buyback worth about $10 billion as soon as the deal's concluded to try and ramp up EPS.
As I understand it, the premium may be a little less in order to help Baxalta's tax status. Is that right, or is that the way it works, or is it the other way around?
I think my understanding is that the tax status is okay regardless of the size of the offer if it's all in paper, because shareholders swap one like for like. But I think if they introduced a cash element to the deal, that would clear the pitch there, which I think is why they're offering this share buyback carrot to saying to Baxalta shareholders, yes, if you accept the paper, we'll give you some cash after the event. So that's their tactic for the moment. Let's see what happens from here.
Okay, all right. Well, let's move along.
Okay. Well, we've got one or two interesting US data points to talk about. First of all, as it's a payrolls week, the ADP employment report, the private sector payrolls report for July, a forecast of a gain of 210,000 against the prior read of 237,000, but the June figure it was unseasonably high, and it's been out of line really with the numbers that we've seen since January 15. So that 210 figure is probably more realistic. And then a bit later on, we have the PMI services index for the US for July, a forecast read of 55.2 against a prior read of 54.8. So we're hoping to see a higher number here. And then equally important, ISM non-manufacturing index for July, a forecast here of 56.2 against the prior read of 56. Anything below 55 for this would be a shock, because we've basically posted 55 or above for the last 12 months. But there's
something of a plateau has been in place in terms.
It has, yes, but it's at least a constant one, yeah.
Right. Okay. Well, let's go on to the movers and levels. Okay.
Well, our first pre-market mover is Walt Disney. They announced figures after the close last night. That's ticker DIS in the US, $113.80, down almost 6.5%. Revenues missed, earnings beat, but the market was concerned about slowing growth in both the media and theme parks. What's interesting is that the market doesn't appear to be placing any premium on the release of the Star Wars film in October, and it seems to sort of set that to one side, and it wants to see the rest of the business perform rather than anticipate good earnings there. So as I say, down 6.5% and could well trend lower. And then the other one that caught my eye, First Solar, that's ticker FSLR in the US, $48.77, up 9.6%. Just when you thought that the solar sector was dead and buried, First Solar come along and post numbers that beat analyst estimates, and they offered strong guidance for Q3. There's some controversy around this company in the way that they book their income. It's one of these companies where they tend to book it before it's actually been so we said collected.
Well, they obviously like to look on the bright side.
They do. Well, very good, sir. But nonetheless, the market likes what it hears, and they're up 9.6%. And in terms of levels to watch today, not much movement in the FTSE. 66.85 plays 67.20, a relatively narrow range there. But the DAX has moved on again. It moved better yesterday. It's better again this morning. So 11,500 now plays 11,605. In terms of the US, obviously, we heard from a Fed governor last night suggesting that rates could move as early as September, which caused equities to say sell off, but to drift lower, let's say. So for the S&P now, we're looking at 2087 plays 2105 to the upside, and for the Dow 17,495 plays 17,599. The move pretty much with the moves in the US markets yesterday were within the bounds of our numbers yesterday. And then what has moved on the back of that Fed governor comment is euro dollar. So now 108.50 to the downside, plays 108.75 on the upside. Quite a narrow range there for a change in euro dollar. And in terms of Aussie dollar, US dollar, a bit more of a bounce here. 73.20 on the downside now, plays 73.85 to the upside. Dollar yen back above 124, so 124.12 now our downside level, plays 124.56 to the upside. And in cable, 155.34 plays 156.06 to the upside. As I say, we may see some more action in that tomorrow with their own interest rate decision.
So the calm before the storm.
Potentially, yes, and obviously the big number on Friday, which could be the deciding factor, I suppose, on US rates in the non-farm payrolls.
Okay, Darren Sinden, market commentator at Admiral Markets, thanks for coming in today, and we'll be back with the Wall Street crossover show this time tomorrow.